What's up YouTube, this is KNG to the Jehu of Wall Street. Today in this video I'm going to be taking you guys on a recap of a trade I took yesterday on gold that ended in 18.95 risk to reward ratio, just following my normal 4 trading rules that I teach my students. So right now, don't forget to follow this video, watch to the end so that you're going to learn this entry model. I'm not hiding anything, and then also subscribe to the channel so that you can see more content like this. And let's get into the video.
Now this is the actual trade I'm doing recap for. You can see this 18.95 risk to reward ratio. So first of all, let me get down to a lower time frame so we can start this video properly. Now gold opened this week, right, and started with this bullish movement, and then this point of interest here is a breaker block that I expected price to come back and retest. So I got this pullback as my liquidity, and I was waiting for price to come back here so that I can buy. Now price came back here, as you can see. Obviously it didn't start buying because of some little economic crash that's happening on the US dollar, but at least I was able to catch a sell to the buy zone even though the buy failed. Now this is a simple technique I use to catch the sell. First of all, if you look here, you can see that we have another block, this green candle on this side. Now this pullback here is my liquidity. It's not clear on this time frame, but I can go down to 5 minutes and show you guys. Now from the 5 minute time frame, we have, let me draw this setup for you guys so that you can understand what I'm talking about. Whenever you have price, in a downtrend, lower highs and lower lows, and then price breaks through your lower low and gives you a pullback like this, right, you're going to expect price to come back to this breaker block and reverse. So this high is going to be your liquidity, then price is going to continue moving. So this exact movement you are seeing here is what happened on this part of the market, and I'm going to show you guys right now. So this is our point of interest, and then this is our liquidity. So now, since we are bearish, we are going to take our entry like this. Okay, now I believe you understand me. So this is our breaker block here. Yes, and then this high, this pullback here is our liquidity. Now after price gave us this, I just placed my limit, and then this even activated. I wasn't even on the chart. I just woke up in the morning and saw that it has activated, and then before the night of yesterday my TP was smashed, and I can show you guys the before and after of this particular trade that I took. And then if you know, there's something called confluences, when you have 2 or more time frames giving you the same direction for the trend. Now on this breaker block I placed this line, and then when I went to my 15-minute time frame, I saw that that same line is in line with this other block here. This small green candle here is my other block, and it falls in line with this line of the breaker block. So that was my confirmation, and then that's how I got this sniper entry to 18.95. If you want to learn more trades and how to take entries like this, I'm running a mentorship every month, and now this is June. We are starting very soon, so click the link in the description to register, and let me help you improve your trading. And one of the advantages of this high risk to reward instead of all this 1:3 is because even when you have 4 to 5 losses sometimes in a row, you're not going to expect to get up to 4 or 5 trades to recover your loss. One single trade like this can give you 4 of your losses and then also give you 5 more. No, this is 18. you recover 4 of your losses and give you 14 more of your risk capital. And this is the safest way to trade and is the fastest way to get profitable gradually, instead of trading 1:2 like the big banks and all those big traders, because they have a lot of money to risk. You don't have a lot of money to risk. So guys, don't forget like and subscribe to the channel for more videos like this, and stick around. Let's go.